Good morning. You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. The entire country is again classified as high risk for COVID-19 on the back of an exponential rise in infections. In Metro Manila, mayors have agreed to implement stricter measures on unvaccinated individuals.
The volatility takes hold of the local bourse after a slide on the first trading day of the year.
The Trade Department believes the ongoing Alert Level 3 in Metro Manila will just have a minimal impact on businesses.
And nearly 2 years into the pandemic, industry leaders say the hybrid work setup is here to stay. We begin our broadcast with the entire country facing yet another surge in COVID-19 cases.
Health officials now believe that this spike in infections might be fueled by the Omicron variant. Mobile journalist Jacob Lazaro with the full story.
New year, old problems, new variants. COVID-19 cases rose with incredible speed in the last week. The health department says the daily average cases went up to 2,061 from last week's 308. That's an increase of almost sixfold. Even the positivity rate shot up from just 2% last December 28 to 20% on Monday, January 3. Because of this, the country's risk classification went back to high risk.
Likewise, the National Capital Region is at high-risk case classification, showing a high-risk 1-week growth rate and 2-week growth rate.
The health department said it expected an uptick because of the increased mobility from the holidays. But no one expected the uptick to be this much, and signs are pointing to the highly mutated Omicron variant.
Pero based on observation sa ngayon, ang assumption natin na andyan na siya sa community because we have seen the sudden increase in the number of cases.
The head of the field hospital, Dr. Arlene Dominguez, said on Christmas Day they only had 6 COVID patients, but in just 1 week, they blew up to at least 334 mild COVID patients or 93% occupancy.
Actually, we didn't expect na ganito kabilis compared nung last surge no August, September.
Despite the spike in cases, healthcare utilization rate both in Metro Manila and nationwide are still at low risk, and majority are mild cases. Still, Dr. Itzel Salvana of the DOH Technical Advisory Working Group warned against complacency.
Itong Omicron, kaya pa rin niyang i-overwhelm yung healthcare system just with the sheer numbers.
Dr. Salvana said, while Omicron is less deadly than Delta by threefold, its highly transmissive quality and its vaccine immune escape makes it a big threat. Dr. Salvana reminds the public to get vaccinated and boosted as soon as you are qualified, because even though breakthrough infections can still occur, the vaccine still prevents severe to critical conditions. Mobile journalist Jacob Lazaro, we are One News.
Over here in Metro Manila, where Alert Level 3 is already in effect, mayors have agreed to ban unvaccinated individuals from going out of their homes except for essential activities. Under the guidelines passed by the Metro Manila Council, the region's unvaccinated population must remain inside their homes at all times except when buying necessities, going to work, or for other essential activities. But for this to take effect, LGUs in NCR have to enact ordinances implementing the guidelines.
Ito'y temporary lamang. Ito lamang ay habang nasa alert level 3 tayo o mas mataas na 4 para maproteksyon din yung mga walang bakuna. Sana maunawaan po ng lahat ito.
Meanwhile, more areas will be placed under alert level 3 starting tomorrow until January 15th due to a sharp rise in cases. These are the provinces closest to Manila, namely Bulacan, Cavite, and Rizal. Okay, Dan, yesterday we opened the year on the back foot, slipping close to 7,000 level, but offshore markets ran in 2022 with a bang.
Exactly. That's right, Jess. At least over in the US. Take a look at my Bloomberg terminal here, the S&P 500 overnight at an all-time high na naman. Despite the crazy cases, in the past 7 days, there have been 10 million people, new infections globally. It's just crazy. Today is the first trading day of the year when you look at Japan, China, and Australia. And let's take a look at that Asia Pacific Open. Markets edging slightly higher there. You can see the Nikkei 225. Actually, the futures are down, but at least right now it's trading at 1.3% up as of 9:19 in the morning. Now let's just take a quick peek at the open here and whether the Bloomberg terminal is actually cooperating with me. It seems to have quite a slight delay here, so we're going to be checking that out perhaps later on in the broadcast because I don't have an updated figure. I still have the market close from yesterday, and this, as you mentioned, we had a very tough opening on the first trading day of the year. Phil Stocks had said that investors simply unloaded their positions amid, of course, the Omicron variant. And not just that, the expectation that it's going to get worse in the middle of January. That surge is expected mid-month. Of course, we have, alert level 3 until Jan 15. We might be facing even tighter restrictions there. And you can see on my terminal here, how the virus amount of new cases in the Philippines is compared to the rest of the world. Let's take a quick peek, however, at the mining sector. Of course, when you look at the year to date, this has actually been, not a bad deal compared to the rest of the bourse, which did slide in the first trading day of the year. And they did have a lot to be happy about, at least in 2021. They continue to post gains in production value. That was a double-digit increase in the first 9 months of 2021. That's from the Mines and Geosciences Bureau. And they showed that the production value of minerals was up 22.3%. That's around close to 100 billion pesos. So, a lot of things going on right now, and we do need to parse through all of this. We have with us to divulge his thoughts this morning, Racine Mercado. He is the head, of course, of China Bank Securities. Good morning, Racine, and welcome to Business World Live.
Good morning, Danny. Thank you for having me, and Happy New Year.
Okay, Racine, despite the open that we had, you have a lot of optimism still. You were quoted as saying that your baseline target is 7,800. Where will we be getting this? Tell us more about how you got this figure.
Well, I think 7,800, it's a mix of two things, right? On one end, it's more moderate earnings growth expectations for companies or index issues, and also more moderate valuation levels in terms of PE multiples. We've been trading at really lofty valuations vis-a-vis historical averages. So that we see that kind of moving towards the 5-year historical average. So especially since you have expectations that central banks will be tightening it. So less liquidity in the market means that valuation premiums might erode. So it's a mix of both.
Okay, but tell us about these valuations. How are you calculating that? Why are you looking at 5 to 6 year averages? Does that include 2020? Does that include 2021? I mean, are we going to be going back to the valuations of pre-pandemic?
We look at 5-year averages because I think on one end it does capture a part of the cycle that we're in. If we zoom out and look at the 10-year, it's roughly the same average, right? So I think the important thing with shorter term averages is that it factors in what's been happening over more recent times, right? So I think right now we're at around, the target is at 18.3 times, which isn't that bad compared to your full year 21 average of 19.5 times, right? So that's significantly higher than where the averages are at.
Can you say that the markets are already pricing in a prolonged lockdown right now beyond January 15? And if so, is that going to have the same impact that we've seen in the lockdowns of 2020 and 2021? Or are markets brushing this off, looking at the rest of the world and saying, this has happened so many times before, there's no need to panic?
Well, I think to a certain extent, investors have already started pricing in the possibility of raising case counts and lockdowns. When news of the Omicron variant came up, we did see that sell off from the 7,374 level down to below 7,000, right? So this is just a follow through of that, and it was kind of expected, right? Because leading up to the rise in case counts here, we were kind of expecting that it was only a matter of time before it comes here, right? So now that it has, what does that mean for all of us? I think one thing that's a little bit encouraging is that we're getting into it with a lot more information as opposed to other countries before. Some studies have shown that it might be more milder than other variants, or at least Delta. And in terms of hospitalization or utilization rates of hospitals, we're still pretty much in the safe zone, right? So I think one thing that's the reason why other countries are bucking that downtrend that usually came with higher case counts, like the US, for example, reaching new highs despite higher cases. I think it's really a shift in pandemic thinking, right? In pandemic management thinking.
Right.
On one end, it's kind of gaining traction that maybe the more appropriate thing to be looking at is hospitalization or hospitalization rates, right? As opposed to case counts per se, because if a lot of these cases are indeed ending up mild, I mean, of course, we should still take precaution as usual, but I mean, that's encouraging because it might not lead into substantial lockdowns as we've seen in 2020 and 2021.
Okay, but you mentioned the offshore optimism despite the record cases. Will this spill over eventually into the local bourse? But also, what about the foreigners? Are they going to be buying in back to the what's the catalyst needed for them? It seems that they have money enough to propel the US markets. How are they going to be buying back into the Philippine markets?
Okay. On the first question, I think eventually it will spill over. It's just that it's the first time that we're seeing the surge in cases, and we're still expecting that to reach new heights over the next few weeks, right? So once the market is kind of priced it in, and then similar to how other markets have fared, once the markets can price it in, then they'll start looking for possible catalysts or possible positive developments down the line. In terms of the other question, I think foreigners will be, I think fund flows in general are going to be looking for cheaper stocks, especially coming off of dovish policy, right? So fund flows in the US may potentially come here. Valuations there are pretty expensive. So we might see some fund flows from those markets trickling into cheaper markets, I think for us relative to the US. So we might be a beneficiary of that.
What about the election season? How is that going to impact the markets?
Well, I think the one thing that a lot of investors are kind of worried about is, of course, change in administration may mean a change in policy focus, right? So I think investors are trying to digest that bit by bit. Of course, we're still some months off from the election. So I think progressively, what investors are going to be looking at first is fourth quarter earnings, full year 2021 earnings, and then eventually we're going to start seeing that pivot into what the election would mean for outlook in the market.
And what's your expectation for fourth quarter earnings, Justine? Better than you were hoping, especially now that the holiday season is over?
I think generally it's more upbeat. I think with the government actually revising their year-end target for GDP, right? It looks like we're looking at a much better 4Q as opposed to when we saw what we were seeing in the first quarter of last year. So I think there is a reason to believe that it might surprise to the upside.
Okay, let's talk about IPOs. You were quoted as saying that you're expecting more of that this year after we already raised a record 234.5 billion pesos in 2018, 8 IPOs, 11 FOOs, 4 stock rights, 8 private placements. I mean, how were these all doing? As we move into this new year, and why do you expect even more activity in the bourse despite all of this volatility? I mean, where's that money going to come from? Have we not absorbed all of that liquidity yet?
Well, I think most that have conducted IPOs last year actually closed the year with gains, right? So I think that's encouraging. We expect a stream of companies to continue conducting IPOs, even if interest rates are seen to rise. I mean, like businesses are looking to expand given recovery and growth expectations beyond 1 year from now. It's really 3 to 5 years down the line, right? So it kind of makes
Right.
sense for them to tap equity markets and strengthen their balance sheets and then build that capacity to take on more debt as they continue with their expansion plans. Of course, what's going to be important is a company's strength of execution when it comes to their expansion plans. I think that's what investors will be particularly paying attention to. Specific to sectors that I think in terms of IPO, it's still going to be broad-based. But of course, those that have taken a beating over the past few years, the pandemic, financials and properties, with their outlook improving, those look like sectors that at least could benefit from a renewed investor interest.
Okay, so financials and properties, two of the most difficult sectors in 2021 might still be benefiting, of course, from investor interest, hopefully looking at a turnaround year for them. Thank you so much, Jose Mercado, China Bank Securities.
Thank you for having me.
Here are the other stories we're keeping our eyes on. The Philippine Stock Exchange has been named as Southeast Asia's best stock exchange at the 15th Annual Best Deal and Solution Awards 2021 of Alpha Southeast magazine. The PSE was recognized after notable issues such as MREIT's $305 million IPO and Mondenisin's nearly 56 billion peso IPO. Alpha Southeast Asia was quoted as saying that these are perfect examples of how to best create shareholder value.
And hybrid work is here to stay. Global communication company Poly says a hybrid setup is likely to be the default work arrangement for Asia Pacific's workforce this year and beyond. The firm notes that the adoption of hybrid work will impact business leaders' approach to workplace design and investment decisions over the long term. Offices will then become, quote, collaboration hubs, serving as a place for teams to gather, to brainstorm in small groups, host client meetings, and the like.
And the First Metro Investment Corporation and the UANP Capital Markets Research said inflation likely surged to 4.4% in 2021. That's from 2.6% in 2020. This figure matches the revised forecast of the Bangko Sentral. But after that projected surge, FMIC says inflation is expected to start decelerating to within target this year. That's as crude oil prices continue their downward trek, while supply chain difficulties get less entangled.
Aisha's Market says the country's manufacturing sector remains in a solid position as factory activity hits a 9-month high last month. The sector's PMI rose to 51.8 in December. That was the highest since March of last year. IHS Market's Shriya Patel says the PMI reflected companies' optimism that demand will continue to improve, prompting them to make advanced preparations. Meanwhile, for RCBC's Mike Ricafort, the recent improvement in the country's PMI is one of the bright spots for the economy, but he warns tighter restrictions implemented starting Monday could slow down economic recovery and also potentially slow down the PMI manufacturing gauge in January. Coming up after the break, small businesses once again find themselves in uncertainty following the reimposition of stricter measures in Metro Manila.
But the DTI believes the impact will just be minimal. More of that story when Business World Live returns.
was allowed to go about.
Welcome back to Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. The Trade Department believes the Alert Level 3 will have a small effect on businesses. Trade Secretary Mon Lopez notes that the major difference between the current quarantine restriction versus Alert Level 2 is the allowed operating capacity. Under Alert Level 3, business establishments are allowed to have 50% outdoor capacity and 30% indoor capacity. Lopez says capacity figures will soon increase as Metro Manila has vaccinated more than 70% of its population. However, the official admits that the shift to Alert Level 3 could cause job losses for 100,000 to 200,000 employees, as well as possible economic losses worth 200 million pesos. Establishments not permitted to operate during Alert Level 3 are gaming establishments and indoor entertainment sites like karaoke bars. One industry that's allowed to keep its doors open under Alert Level 3, although at smaller capacity, is the restaurant sector. How much is this going to offset gains made during the peak holiday season? Let's find out from Eric Teng, President of Resto PH. Good morning, Sir Eric. Thank you for joining us.
Morning, Jester. Happy New Year.
Happy New Year, sir. Of course, we're starting the year with on a low note here. NCR and nearby provinces placed under Alert Level 3. Movement for the unvaccinated being restricted yet again. Is this a reasonable move for the sector?
No, actually, we were expecting some sort of surge to happen in January. After all, we are 109 million population going out and about during the Christmas holidays, having parties. So it's reasonable to expect some sort of surge can occur in January, but we were hoping that it can happen later in January. So we weren't surprised. We were expecting the alert level to be moved to Alert Level 3 anyway. And for the most part, the restaurants did well for November, December to be able to cope with January.
But how exactly is this going to impact the sector? How much of a loss are you expecting here?
Well, for example, for November, December, we were almost at pre-pandemic levels during the weekends, although the weekdays can feel like GCQ levels. So that was driven by the complete family unit going out and about to restaurants and malls. Now, when they bar children and seniors from coming out again, we can expect our sales to drop below 50%. Just for Monday alone, just for yesterday, it was probably around 20-30% of December levels. So I hope that's not going to be normal for 7 days of the week. But if that's an indication, then it's going to be a difficult 2 weeks ahead.
But we're not really expecting any shutdown or closure from your members, at least.
I'm actually having a meeting with our members, and one of the things that we have to discuss is scenarios. And we have to go through scenarios of Alert Level 3, Alert Level 4, and even Alert Level 5, because we certainly don't know what's going to happen in the next few weeks. We're happy when we hear that Omicron might be a mild version and therefore not as deadly as Delta, but we're concerned that it's more transmissible and therefore causing more problems in the hospitals, and how government and the private sector will react to that. So right now we're confused, but it's okay to be confused because it allows us to study all options, study all the scenarios, and try to prepare ourselves for whatever scenarios come our way.
Do you feel like at least at this stage, the sector is already well positioned in the event that restrictions once again get heightened to at least alert level 4 or even Alert Level 5?
We have the scabs to show for we have the scars to show how we survived the last 2 years. And we pretty much understand how things work under restrictive markets these days, especially for the restaurant industry. So we are under no illusion that things will be easy for 2022. But for the most part, we have vaccinated staff. We're only allowed to deal with vaccinated customers. And we're hoping that that is a layer of safety that will mitigate a lot of the problems we might have later on had we not been that much vaccinated in our workforce.
Since you mentioned about your workers question, or is there still a portion of your workforce that is still unvaccinated? Are you at least considering mandating it for your employees? Or at the same time, are you considering requiring as well booster shots?
Well, I don't think I have the right to mandate vaccines for our employees, but my company is 100% vaccinated. And for the most part, from the membership, from what I hear, it's clearly over 90% vaccinated for the staff. Those who aren't vaccinated are not necessarily displaced. They were given other options just so that they're not working in the restaurants as well. So, you know, I think the vaccination is a game changer this year compared to last March when we had the other lockdown event. So we don't want to mandate anything. We don't want to force anyone to do anything. And we're hoping that people can see the practical benefits of getting vaccinated. And I'm now talking about the customers, the general public. I'm sure that hesitancy is still there, but this will find, according to to Father Nick Austriaco of Opta, Omicron will find every single unvaccinated Filipino out there. So it's just a matter of time when we're all infected, and therefore, I think getting vaccinated is a better option.
Okay, now even as we shift to alert level 3 here in NCR and nearby provinces, is 100% of the workforce still going to be employed, or are we expecting to lay off some of the employees for now?
That's a good question. We really don't know what will happen in the next few weeks. Of course, in our industry, we already have labor shortage actually, because a lot of our workers are not able to come back to Manila to work or unable to cope with the transportation difficulties, or they would rather work in the provinces. So right now, for the restaurant industry, we actually have a labor shortage, not a labor surplus. So I don't see restaurants letting go of people, because of our current alert level status. But we're hoping that on the 5th, we're monitoring almost daily. So whatever trends come our way, we try to find as much insight as we can and try to give ourselves some runway to plan ahead. Our planning will be for the period after January 15th. We're hoping that the alert level will stay either at 3. Hoping it doesn't deteriorate to 4. But in case it does deteriorate to 4, then we must also be prepared for that.
All right, lastly, before we let you go, like you mentioned, at least during the holiday season, somehow you returned to pre-pandemic levels. Does that mean that you ended 2021 better compared to how you capped off 2020?
Oh, I'd say it's just about even, because we lost so much during August, September, during the lockdown. We had 2 lockdown periods in 2021. And we were able to compensate just because of our vaccinated population being more confident to go out, and also because of the low daily cases for December. So for November, December, as I said, the weekends can feel like pre-pandemic or even better. But the weekdays felt like we were still in the pandemic, like a GCQ level sales from Mondays to Wednesdays. It's difficult because there are so many restaurants that are already closed down. So there are less competition, unlike in 2019. So maybe that's one factor why surviving restaurants enjoy better sales, apart from as the observation I mentioned earlier about the families going out and about. But for this year, we're hoping that it would have improved anyway, if not this Omicron.
All right. Thank you very much for your time. We're still hoping, of course, that you're going to have a better year this year. Again, Eric Tang, President of Resto PH.
Thank you.
And that's a first look into the business day this Tuesday, January 4, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe. Philippines, we are One News.